This is Adrienne Marks coming to you from beautiful San Clemente with a real estate market update. The good news is our spring selling season is off to a great start. All right, let's start off with Thomas Lawler, housing economist in Leesburg, Virginia. He's very well respected, quoted oftentimes in the Wall Street Journal and the New York Times. This is what he has to say about the spring season. The spring home selling season is off to a very good start. I think the rest of the season is going to be materially better than a year ago. So what he's saying is it looks like this year's going to be a lot better than last year, and the numbers are proving that out. In the existing home sales report from NAR, we can see that through the winter months it slides off a little bit, but it shot up in February and March. The spring selling season actually started a little bit early this year, and if we take a look at it, it's really cascading upward. If we look at the January, February, and March numbers, there's very nice growth in each one of those months. In Southern California counties, January and February weren't as extreme jumps as we saw in other parts of the country, but look at March and April. Things are looking great. There are people out buying houses, and it's happening in every single region of the country. So what we're seeing is in every region in the country, at every price point, sales are increasing. That's a nice, healthy market. And if we take a look even deeper, we can see on a month-by-month basis, both existing home sales and new home sales, that each month we're doing a little better. On new construction, we're also increasing nicely over the same month last year, though obviously there weren't as many new homes selling as there were existing homes selling. That number, the new home sales number, it's still a little bit soft compared to not the last couple of years, but to historic norms. But the nice thing is that the National Association of Home Builders believes that this year, 2015, and again in 2016, we're going to see nice increases in new single-family home sales. They're predicting a 9% increase for this year and a 39% increase for next year. So existing home sales, regular home sales, every single month, every single price point, and every single region of the country, things are going quite well. Now, you know we like to look at pending home sales because that's a precursor to what's going to take place on the existing home sales report. And again, that's increasing nicely. We break it down because now NAR gives us that information. We're also breaking the pending home sales report down by region. And we can see in each region outside of the Northeast, there have been double-digit increases in sales, number of sales going into contract. And again, when we talk about the Northeast, they've been dealing with some pretty tough weather out there. Now, all this great news is leading to what? Houses selling quickly, and we can see on this national map that in many parts of the country, houses are selling quicker than 45 days. Now, it's another story here in Orange and LA counties in Southern California. The days on market in those areas is definitely lagging behind other parts of the country and even behind other areas within our state. Now, all of that, the number of houses selling and the excitement in the market, the fact that houses are selling quick, that's all good news to us. No doubt about that. However, we do have a challenge that's being created by all this demand, and that's cutting into supply pretty dramatically. Taking a look at the inventory level numbers year over year, we can see that for the first time in 4 months, we're actually over last year. That's a good thing. But if we take a look a little bit more closely, even though that number's a little better, it's still way below a normal 6-month inventory for a normal market, especially in Orange and LA counties where we're under 3 months of inventory right now. Look at the Case-Shiller report right here, and you can see that prices have actually bottomed out and are starting to turn the other way. What does that mean? Well, if we look at the percentage change in U.S. home price appreciation year over the last several years, we can see that the pendulum swung back in 2007, 2008, 2009, 2010. Prices were dropping like a rock. The pendulum swung back in 2012, 13, and 14. This year's prices are projected by CoreLogic to be going up 6% and next year 5.4%. And I agree, that's good news that prices are remaining strong. As a matter of fact, if we take a look at the 4 major groups that are projecting prices, Freddie Mac, the Home Price Expectation Survey, the Urban Land Institute's projections, and CoreLogic, which we just mentioned to you, what we can see is everyone's projecting some pretty strong price appreciation this year when you take into consideration that historical annual price appreciation is usually about 3.5%. So what does it mean that the numbers are going up? Well, there's good and bad. Number one is there's starting to be that big question out there. Is another housing bubble about to take place? I think the person who explained that best was Jonathan Smoke, the chief economist at Realtor.com. He says, this spring's buying season is off to a strong start, which we just proved to you. In fact, prices are going up faster than they were just a few months ago, according to nearly every recent metric, and we just gave you a couple of those. So does that mean we're in a bubble? Well, according to John Smoke, nope, that's just what happens when demand increases faster than supply. And that's what's taking place right now, ladies and gentlemen. Demand is increasing faster than supply. As a result, we will see an increase in prices. And here's the good news for rising prices. Again from Jonathan Smoke, it's still a seller's market. Realtor.com shows that supply is not keeping pace with the surging demand. We expect, and here's the important part, we expect rising prices will persuade those who may be on the fence about putting their home on the market to do so in the coming months, leading to a closer parity between supply and demand. Because prices are going up, people are feeling more confident. First of all, a lot of people are coming out of negative equity. Other people are having enough positive equity that they can pay their mortgage off. Some people are saying, you know what, I have enough equity that I can pay off my mortgage, pay the realtor, and also have a nice chunk out there for a down payment on my next house. Now let's take a look at interest rates. This is where they've been over the last several years. This is where they've been over the last several decades. And we can see that in the 70s, they were twice what they are now. In the 80s, they were triple what they are now. In the 90s, again, they were over twice what they are now. And even just a few years ago, they were up almost, as a matter of fact, more than 50%. And if we take a look at from just 2011 on, and what's being projected by Freddie Mac in 2016, next year, we can see that right now buyers have the best opportunity that they could have. Back in 1981, a $500,000 mortgage, just principal and interest, cost you nearly $7,800 a month. Right now, that number is under $2,400, and at the all-time low back in November of 2013, it was less than $2,200. Now, the not-so-good news, those low interest rates are going to go up. I understand that these projections have been modified downward over the last couple of months, but if we take a look at the bottom right-hand corner, when we average out all four of the Fannie Mae, Freddie Mac, Mortgage Bankers Association, and National Association of Realtors numbers, we're still at an interest rate just about 1 full percentage point higher than it is now. Now, for you first-time home buyers, take a look at this graph. Look at how rents have risen over the last 10 years. And for those of us living in Orange County, you know that maybe you can rent a room in a house for the same price as the national median rent. That's pretty dramatic, wouldn't you say? A senior economist at Reese, who looks at rentals, that's what their job is, that's what their company does, says, I wish I had a better story to tell renters these days, but I think they're in for some rent increases for the foreseeable future. Think about the previous slide with rents skyrocketing and what Ryan Severino, senior economist at Reese, said about it. And I have to tell you, there's no need for people to rent. Whether you're a first-time buyer or even a move-up buyer, you need to know you can get a mortgage. Mortgage credit availability is skyrocketing since 2013. Whether you currently rent or are second or third-time buyers, don't think that you're stuck because you can't get a mortgage. I work with many great lenders that would be happy to talk to you about obtaining a home loan. Now, a number of factors are quoted by Mike Frantantoni, MBA's chief economist, and a number of factors contributed to the loosening of credit in March. Freddie Mac's introduction of their 97% loan-to-value program, meaning people only needed 3% down. Fannie Mae's was implemented in December, and the loosening of parameters on jumbo loan programs. Although credit remains tight by historical standards, this increase in availability coupled with the low rates and job market strength should lead to a stronger home purchase activity this spring, which we're already seeing. So if you're thinking of upsizing, downsizing, or getting in as a first-time buyer, now just might be the right time to do so. We believe that knowledge is power, and in an effort to help the many individuals out there who are thinking of selling or buying a home in the near future, we have some important information to share with you so that you can feel confident about making informed decisions concerning the most valuable asset you're likely to own, your own home. You can get a free report for sellers or buyers simply by clicking on the corresponding links. All you have to do is plug in your name and email address, and you'll receive your report via email in a matter of minutes. That's our market recap for this month. Check back with us in June to celebrate National Home Ownership Month.